All right, well, it's time to get started, folks, so let's go ahead and get rolling here. This is Price Headley coming in loud and clear from Lexington, Kentucky, and appreciate everybody sharing where they're coming in. It's really my great honor and privilege to be in with the entire Candlestick Trading Forum community. You know, Steve Bigelow and myself have been friends for a long, long time. I've grown to respect Steve's work a whole lot, having seen him share it in numerous live events as well as on these webinar platforms. So I appreciate Steve and his team hosting me here tonight. And so we're going to go ahead and get started. You know, my background is that after I got out of Duke University, I went straight into looking for a job in trading because I knew it was what I wanted to do. From a very early age, I enjoy the markets and enjoy the process of looking for opportunities. So what I'm going to share with you tonight is my top trading strategies from, at this point now, my 24 years of official trading experience working in the business, pretty much right out of college, and basically, jumped right into it. And what happens through a couple decades of experience is you learn not only by what works, but you also learn by the mistakes that you make early on. And of course, the secret, as you well know, is not repeating mistakes. You need to be able to make sure that you learn from, the classic, phrase that, hey, how do you get experience? By making mistakes. You have to gain from that experience, get insight from that. So I'm going to share with you really what, for me, has become kind of the best of the best profile for finding meaningful trends, the big trends as I call it, in the market. This presentation is being recorded by the good folks here at Candlestick Trading Forum, so you should be able to pick it up later on your archive. We're going to go around an hour, maybe a little bit over, so you have to jump out early. Just wanted you to know about our timeline. And we're going to start by talking about the whole idea of, educating first. You've got to make sure that you've got the right education before you can start to go in the markets diving in. I see way too many people who are diving into the markets who frankly don't know what their game plan is to how to get into a trade, and more importantly, how to manage a trade. So we'll talk tonight about trade management, and we'll focus then also, I'll show you a little bit of an overview later on about how I go and explore for new opportunities with what I call trading scans, looking for, once I have the setup patterns defined, where are the opportunities in the markets. Now I want to ask you a quick question. What type of a trader or investor would you classify yourself as? And maybe also you might type in, are you more of a day trader, more of a swing trader, 3 to 5 days, more of a position trader up to about a month, or a longer-term investor? So we have quite a few in the swing trade arena. Some of you doing a combination of things. That's great. We have some of you doing a little bit more short-term with day trade. So mostly day or swing trade with a heavy bias towards the swing trading, and I'm assuming that, if you type in what's your favorite vehicle to trade, is it stock, is it options, is it futures, Forex, or something else, ETFs? And, stocks and options predominantly, and that's mainly where we'll focus, but you can apply what I'm going to teach you here tonight to the other vehicles like Forex and futures as well. So there's something in there for everybody here tonight as well. Now, once you've done all that work, how many times have you done the work, but then for some reason, this last E here, execute, you don't pull the trigger? If you don't execute, then ultimately all that other work that you do is really for naught, unless you're using it as just part of your educational experience. But look, we're all looking for ways to get paid in this market, and so we're going to share with you how we go about, executing and looking for these opportunities, and then how you can actually advance your education with the special that I've set up just for the Candlestick Trading Forum group here tonight, that you can get started with literally 10 hours of my content, as a way to advance your knowledge dramatically. So, if you think about it as the bullseye, the education is kind of the broader target. At least you're pointed in the right direction by getting yourself educated. As you get more versed, then you can start to narrow your focus down to a smaller list of candidates. And then ultimately it's about, if you're going to hit the bullseye, it's about being able to pull the trigger, not only getting in, but even more importantly, knowing how to get out. So we'll talk about exits here tonight. And I'm going to share a lot of current charts and also some of the lessons I've learned across some of our best trades. And we'll look at some of the trades we've made here in 2013 to date. so you can get a fresh sense of what we're doing here in the current markets. Now, I think the big thing, though, is that no matter what you're going to do in the markets, whether you're going to be a quick trader, more of a swing trader, or a longer-term trader, or investor even, you need to have a plan of action. You know, if you were a business, and you've got to think of your trading the same way, you have a trading business, which is your capital. You just happen to be both the owner of your trading business and also the chief employee of your trading business, if you think of it that way, that has to go and execute your plan in most cases, unless you build yourself up to have a support team around you. Well, the bottom line is that you've got to get clear about, on any plan, you've got to know what's your goal, what are you trying to take out of the market, what is your end result that you want to achieve. You've got to know what strategies you're going to use to get there. You've got to know what is your method, your system. If you think about it, every good business has a system. If you think about McDonald's, for example, you know, McDonald's, every single thing in McDonald's is categorized and goes according to a very clear plan that when you buy a franchise at McDonald's, if you've got the cash to do that, they take you through McDonald's University and you make sure that you learn how many seconds the fries should stay in, you know, how long you have before people get upset in the drive-thru line. You got to move them through. So basically everything is about following that system and that handbook, if you will. It's the same idea for me in looking for any given trade. You've got to have a system and a plan of attack. And this all boils back to having an edge in your trading. See, if you don't have an edge, then frankly, you're not investing or trading, you're gambling without an edge. If you go sit down at the house in Vegas, the bottom line is that they know that they give you those little reward cards to keep you plugged in there, and you think you're doing yourself a favor by plugging those cards in, but actually that's just assuring them that the longer you sit at the table, the more that the Vegas house edge is going to kick in. Now, from this perspective, clearly we get an opportunity here to say, okay, how do we manage to develop an edge in the markets? For me, it starts with technical analysis. I've studied fundamentals, I've studied technicals, and what I find is that the shorter term you trade, the more important the technical analysis will be. So from this perspective, what is technical analysis? As a part of this Candlestick Trading Forum group here, you know how important the price action is. Of course, you know that technicals have been used going back centuries. But for me, the beautiful thing about it is that computers give me a way to literally run through thousands of potential candidates and boil them down to a handful. So from this perspective, you get a real opportunity here to take advantage of these situations here. Now, a couple of you said my voice is cutting in and out. I don't know if I'm talking too fast or if it's actually a mic problem here, but I'm going to make sure that we do everything we can to go at a nice, steady pace here for you. Now, a big thing that's going on right now is earnings. And the earnings here is basically looking at, you know, people look at the news. You know, for example, Google came in tonight and Google said, hey, you know, it looks like we're doing better than what the market expected. Initially, the stock got a big pop up on the news, but actually that's moderated quite a bit. We're going to look at a lot of these charts here. We're going to talk about some of these opportunities and how you can focus on that. But, you know, Google was up to 790 in the immediate action right after the market closed when the news hit from about 765 where it closed. It was up $25, and then now it's up only about 10 or 11 bucks after hours. Okay, so what we're going to look at is it's not just the news that matters, it's how the stock and the market reacts to that news. So you know what's been happening here in this market in the last several years, despite all the debt that the U.S. has, that the market has been going up, thanks to Ben Bernanke and company, and you have to learn, you've probably heard that phrase, never fight the Fed. You've always got to be in tune with what the Fed is doing, and they're obviously inflating this market in every way possible, despite a whole lot of bad news, including the jobs data that came out for March back on the first Friday in April showed 88,000 jobs added when they were expecting 190,000 jobs added. So it came up 100,000 jobs short for the month. You know, that's pretty substantial. So, you know, but the market rallied despite that early gap down. So we've got to watch the reaction to the news rather than just the news itself. And we watch what everybody else is doing in the options markets in the form of options activity for calls and puts, which leads to a measure of fear and greed. How much greed is there when everybody's buying calls, bullish bets, betting on the upside? That's when you know there's usually a negative surprise coming. Because let's face it, if everybody is bullish, then everybody can't be right. We're dealing with a supply and demand game. You've seen it multiple times in the past where, for example, Apple would probably be the latest example. That Apple is a great example where, everybody knew that it was going to come out with this, iPhone 5 back last September, right? And we're going to kind of hop back and forth between the charts and others, but bottom line, let's just share with you for a second. There's Google, by the way, I was just mentioning. We're going to look at what all these charts mean and what we're going to focus you on some of these key indicators here tonight. Google's up, but only about 10, 11 points after hours from where it closed tonight. That's not enough to really boost the options. But let's talk Apple for a second. A lot of people ask me about Apple. Guess what? Everybody knew that Apple was going to be reporting the iPhone 5. It had run up huge last year. Our system caught that buy in December of 2011 at about $399 and change and gave an exit for the stock on that first move at 578.94. So, caught like a 180-point move in Apple on that particular run. Caught a couple more buys, and then you can see the top in Apple happened the day they announced the iPhone 5. Let's zoom it in here. The day they announced it was September 21st. That was the all-time high in Apple stock, 705.07, and it's been down ever since. Now you can see our system has not had a buy ever since that last exit that was given there on 9/27 at 664, and ever since it's been 1, 2, 3, 4, 5, 6, and now we're on a seventh short signal. The latest short here came at 424.50. So that was on April the 5th. Just a little over a couple weeks ago, and look at how Apple has continued to plunge. We're going to talk about what these indicators mean, but you all know that Apple is supposedly a cheap stock. And that's right, Dennis. You want to buy the rumor and sell the news. By the time it's expected, it's too late. So you've got to watch how the stock reacts. But that cheap stock thinking gets a lot of people in trouble. You cannot afford to buy a cheap stock and watch it keep on going down here. So the computer will tell us when we have a buy and a sell. And the idea here is, why is Apple peaking out when that news comes out? Because the market had already discounted what was going on there with Apple, and now the question was, are they going to have bigger demand for it? Turned out that basically it wasn't a groundbreaking new product entry. It was more of an incremental entry, a little bit bigger screen, a little bit lighter and thinner, and not enough people upgraded, and so therefore, the disappointment factor started to set in. So, the technical traders, you want to be aware when something like earnings is coming out, obviously, but you've got to know that a stock price is going to reflect the known fundamentals. The question is, what is the surprise? Is the surprise going to be an upside surprise or a downside surprise? How many times have you seen it where your stock reports good earnings, good in the terms of that they were beating estimates, and the stock actually drops on the news? You ever had that experience? You're like, oh, good, my stock's going to go up. You're betting that that's going to have good news. You're right, and yet the stock actually drops on the news. Yeah, Dennis, it's often happened. Hey, it's happened to all of us, and that's why I think it's very dangerous, especially since a lot of you are option traders like I am, to trade options right in front of earnings, because what will happen is that you'll see a run-up sometimes in front of the earnings, and then those options get bid up because people know that the earnings can create a big move, and then you see the disappointment factor set in. So that's when volatility is usually too high. We don't like to buy options right in front of earnings. These trends, though, will occur. That trends become almost like self-fulfilling prophecies because, hey, let's face it, we're all humans. We're all driven by emotions. We have to manage our emotions to be ahead of the pack. But let's face it, you all still have some of that fight or flight in you that's basically programmed into us for making sure that we weren't the slowest person running away from the cheetah and getting caught, So the bottom line is there's some of that fight or flight in all of us. You got to learn how to manage that. But when you see this price trend start to occur, you'll see a lot more people follow a trend. Here's a quick way to identify that. If you're in a winning position and a losing position, and you're seeing them grow. You're seeing the winner get bigger, and you're seeing your loser also get bigger. Which one takes more of your emotional energy, your internal thoughts, your internal, emotion, if you will? Would you say it's the winner or the loser? Just a quick little curious question. And I would bet you to almost a person, I'm not going to put words in anybody's mouth, everybody says the loser. So think about this for a second. And I've only had one person tell me seriously they put more worry into the winner because they're afraid it was going to turn into a loser. The one that's biggest says Wayne. Yeah. Well, the bottom line is that the reality is that winners are easy. When you're riding the trend, it's a lot easier. When you're fighting the trend or on the wrong side of the trend, it's a lot harder. It's a lot more like you know that you're wrong, and now you're trying to say, where can I get out of this pig? Where can I dump this thing so I can reduce that not only financial pain but emotional pain? And if you figure out how to get rid of your losers quickly, you free yourself up emotionally to go look for new opportunities. You don't get locked down into the dogs. You go look for the diamonds. You look for the opportunities. And so that's very, very valuable as just a real quick lesson. We're going to show you how I put on trades right at key levels, and I can cut and run quickly if I'm not right. Because one of my mottos in my own trading is it's okay to be wrong, but don't be wrong for long. That's right, Rob. Losers are an energy drain. And so you get a situation here in which we don't want to have our energy or our financial energy of our portfolio drained by losers. You probably heard the term of, are you financing a loser by either continuing to add to it or hang on to it? It's like if you were thinking of yourself as a retail operation, the inventory that you'd be holding, you don't want to hold things that people don't want to buy. Where do they go? They go to the clearance rack. The retailer tries to get rid of them so they can get them out of the store and make room for hotter selling items. It's the same idea in your portfolio. You want to get in the habit of rotating to the winners. Now, the converse, the other side of that, is when you're on a winner, too many of you are getting rid of your winners far too fast. You're afraid a winner's going to turn into a loser, so you book a winner real quickly and say, see, I can't go broke taking a profit. But actually, you can get yourself in a lot of trouble if you take small gains and bigger losses. That's not a pattern of success. So I want to show you how you can take part of your profits but then also manage it to get out of the rest a little bit later. Let it ride. Give yourself a chance for that runner, but also know where you got to pull the plug on the rest of your trade too. See, technicals are based on this third assumption that the past will tend to be repeated in the future. When I launched Big Trends back in 1999, I wrote a book soon after that called Big Trends in Trading, and a few people used to critique me because this was back in about 2001 it came out, and they said, well, a lot of your examples about how you launched your company were based on tech stocks and brokerage companies and stocks that were really hot in the late 90s. And they said, like Cisco Systems, like Cisco will never go through another bullish cycle like that. Okay, well, guess what? Cisco may not, and it has, but not quite to that extreme. But have you seen any bubbles over the last decade, since 2000? Have you seen any bubbles? Think about the bubbles that we've had. We've had bubbles in how many different areas? Count them out. Real estate, you had the bubble up and down. Oil, you had the bubble up and bubble down. Yes, there's a debt bubble still going on, Rob. There's the gold bubble, which is now just starting to crack. There's basically the Apple bubble, up and back down. There's China stocks. That's right. You can go on and on. There's a bond bubble still going on. So we've seen a lot of bubbles. So your job becomes how can you identify this? And so these patterns is what we're looking for. I don't mind that the names are going to change, but I want you to be aware of what the pattern is where there's opportunity. And then when you see that pattern repeating itself, this is where you have to teach yourself what to look for. It'll become really powerful. So let's talk about an example. Here's a past chart. We'll look at a fresh example on Vegas Sands here in just a minute. But you can do this across multiple platforms. This uses multiple things that I like to look at. One of the first things is acceleration bands. The idea of an acceleration band is that if we get two closes outside of this blue band, it tells me something unusual is happening here. This buy signal is actually driven off of the percent R hitting an overbought level and then basically staying in an overbought threshold. something I teach my students about, which is Larry Williams, the percent R, percent range indicator on that bottom panel. I use it in a very different way. Why? Because it tests so well for catching strong trending moves. If you're going to trade options, you must make sure that your option is going to basically benefit from the fact that the stock is moving up faster than the amount of time that's working against you if you buy options. And yes, you can sell options too, but I find that ultimately buying options, if you do it the right way, can make you a whole lot more money. You just need to know how to manage some of that day-to-day volatility. So what I look for are these sweet spots, as I call them, where we're breaking the overbought area. This next move here in June didn't last as long. And notice it also didn't get the benefit of the move over the acceleration band like the prior March-April move did. So you can see the difference here. We also look at the CCI, the Commodity Channel Index, in that middle panel. But the more building blocks you can put together that back up your thesis, back up your view of is this stock ready to move, the more, in my experience, you're going to have a lot of confidence making those trades. So when we see that happening, here's one example where this next move that happens in July was kind of slow. It got off to a good initial start. You can see that the percent R and the CCI are breaking out here, and this thing's continuing on up through that high. Just because something breaks out, folks, I won't buy it just on that first, what I call setup. I'll look for it to follow through. Vegas Sand starts to follow through. It does actually give what we call a low-risk retest. So here's an example of a retest trade. If you see percent R come back under that overbought threshold, right on that key low right there, I can buy right into that low and say, look, if it closes underneath that low going forward, I'm going to hop out of this trade. But instead, you get a nice little quick rally over the next week where you get an opportunity to maybe sell some of that back into these bands here as a first target and then try to ride the rest. It then actually comes in for another retest and finally gives us a stop on the last piece right here in the end of August. Now, the great thing about percent R is that if it's wrong about stopping you out, if you keep breaking out again to the upside, this one breaks out just literally 2 days later above that next day's resistance and closes above it, that's telling me that, indeed, it's ready to go. You see, I do like to look at candles, but here I'm looking at the broader pattern here. And so from this perspective, Cal says we're talking about percent R as an unsmooth stochastic. That's the right idea. We're not smoothing it out. So percent R will have more volatility than a stochastic or an RSI will. I like that volatility because every time it comes back in for what I call a retest, we talked about low-risk entry points. And at least on a relative basis, if I could draw a straight line, right off of that low right there at about $32, you can see that basically it's coming right up into that. My mouse will allow me. And if it closes underneath that, I got to get out. But if it doesn't, I've got a nice entry. How many times have you missed a move and then you said, oh, I missed it. Vegas Sands has run from 32 up to 37 or even almost 40. I'm an idiot for missing that move. Just forget about it. I'm off to the next trade. Then you look back up here and go, oh my gosh, I was looking at it in the upper 30s and now it's at 55. Man, I'm really an idiot, right? So basically, we all get a chance to beat ourselves up in the markets, and I want you to work on not beating yourself up so much, but when you find these retest opportunities, like the next one there in mid-October, they'll usually come on some kind of a short little pullback. There it is, mid-October, right around $37. So if you miss that last setup, you can get back on the horse here. Now, you are going to be buying in at each successive retest at usually higher and higher levels within an uptrend. That is proper market structure. You want to see your chart breaking out. I get this question a lot, like Lynn is asking me, how do I know a retest is really going to hold or is it going to continue into a decline? And the answer is, I don't. But what I do know is if I'm wrong, I'm going to get stopped out anywhere under this $37 level, whether it's by a penny under that low on a future close or whether it's by $2 under that low. I'm going to get stopped out there, and that's going to keep my risk down. In comparison, let's say that we took a 2-point loss and went from 37 to 35. That'd be a pretty violent breakdown. But let's assume the worst, back to this lower acceleration band. Okay, if you lose 2, but in this case, look at how much it makes on the next run. It goes to 55, and the exit here happens at around $49. So we'll just assume based on the exit Okay, if you go from 37 to 49, you made 12. If you lose 2 and make 12, is that a pretty good risk versus reward scenario? Yeah, I mean, of course. I mean, they're not always going to be 6-to-1 reward to risk like that, but the bottom line is that you typically get more upside in this strategy with minimal or manageable downside. You will have risk, but with options, of course, if we're wrong, we can cut and run quickly. We've minimized the amount of time we're in the trade, because if you're wrong, you usually know it very quickly. And so that will help you. So I don't wait. Jim asked, do I wait for %R to turn back up? If you wait, and instead of buying it at 37, you buy it, say, as it turns back up here at 39, essentially what's happened is you've just widened the amount of risk that you're taking. Instead of taking the risk of it closing under 37, now you're saying I'm buying it at 39, and now it's got to close under 37. Now if it goes to 35, instead of having 2 points of risk, you've now got 4 points of risk. So I buy it right into the teeth of those retests once it's a proven uptrend, okay? So when we talk about what this means, we're saying, look, I'm not worried about fundamentals so much. Yes, you want to be aware of what companies have had good earnings. I look at earnings reactions in particular, and that's a catalyst that can be useful. But as I showed you with Apple, it can cost you a lot of opportunity and money if you buy a quote-unquote cheap stock that just keeps getting cheaper, or buy calls on a cheap stock thinking that, well, Apple's now under a forward PE of that's about 9. It usually trades at a forward PE of like 16 to 17. But guess what? The stock's gotten pummeled over the last 2 days from 420 down to 390, right? So you can't afford to be on the wrong side of that trend. By the way, in comparison, if you were, well, I'm just talking about Apple because I know a lot of you are interested in Apple. If you look at the intraday charts, in addition to the daily chart that I was just telling you about, look at the intraday charts. The hourly chart shows the %R breakdown. We had one of them, and then it stopped out for a slight loss. Okay, so that one did not work. So we're starting to make some money at 423, and then it stopped you out at 426. You lost 3 points there a day later, day and a half later. But then the next one gave a sell here on the hourly at 401, and now you're 10 points to the good there. You know, same thing on the 15-minute chart. 15-minute chart went bear confirmed there at 402. So it's been bearish for the last day and change. So you see %R staying in the bottom threshold, even on a 15-minute chart, can be incredibly useful, all right? So obviously I'm going through a lot. I'm trying to condense 20 years of knowledge into an hour. That's not realistic, but at least we're going to hopefully give you a good overview and tell you how you can continue on. But I'm always studying to look for where there's an opportunity in the markets. You know, if you see, for example, if I'm looking at, let's just look, here's a I just clicked on this, and in TradeStation, it tells me that on a 15-minute chart, you could have made, on 100 shares, you could have made 35 grand looking back over the last roughly, year and 2 months, back to 2012 of last year. Okay? If you looked at an hourly chart, and you can even look at an equity curve, it's had an amazingly steady equity curve trading Apple, long and short. And you can even look at your performance summary is got winners on the long side and the short side even more now. The hourly chart, you see, longs are good, shorts have not been good on the hourly chart. And so that's going to hurt our equity curve. It's going to make that equity curve look a lot consistent. Which one would I rather trade? Well, obviously, if you can't assume that the future is always going to work like the past, but obviously I'm going to put more energy into that 15-minute because it's working a lot better than that hourly chart right now. But I do look at all these time frames. The daily chart, you see, has had a very steady equity curve going back to 2006. Just some of the analysis I do within TradeStation to show me which stocks I want to trade options on, because those are the ones that will give you greater consistency. Now, I'm sorry if we're getting any little bit of breaks in the audio, but we're trying to, we're sharing a lot of data. That might be part of the problem here. But we're looking at these patterns that can repeat themselves, and we're going to look for that price action to look for predicting future price movements. Now, how does a trend start? As a trader, you have to be willing to not just overreact to every little blip on the charts. My experience is that I want to make sure to minimize whipsaws. I can't get rid of all of them, but I want to minimize those whipsaws because it's the whipsaws in your, not just your financial capital, but it affects your internal confidence. We want to really make sure we keep our big trend students really looking at the best opportunities to filter out a lot of bad trades. We can't get rid of all of them. They're still going to be losing trades. Our job is to say, look, if we're wrong, let's not be wrong for long. Let's get out. But we will look today at a couple of filters how I filter those things out. Now, I use what I call a two-step approach. The first step is the one that most people are buying on, is what I call the setup. That's like, hey, it's starting to move. But I'm looking for the market to say, prove it. Prove it to me, market, that you're ready to go. Whatever stock, whatever ETF, whatever option will then go say, okay, when does it then confirm that move? So a setup is that first indication, that first possible breakout. But the confirmation is where we get the point to go ahead and hop on board. Because there's a temptation, I'm sure you've felt that when you see something starting to move, you think, oh, I'm missing out. I need to jump into that. Well, it's that reactionary nature that you've got to manage. And if you can manage that, you'll save yourself a lot of whipsaws. These best trends will want to follow through. I'm willing to give up another bar of action to get confirmation, additional support that what I'm seeing here is actually being validated by the market. This happens a lot, by the way, with these whipsaws. These what I call fake outs rather than the true breakouts happen when you get a big earnings reaction where it looks like it had good news and it gaps up on the earnings. Citigroup is one of those. It gapped up on the earnings and then it failed to follow through and then it's backed off with the rest of the bank stocks. So, you don't want to just chase that first gap. You want to make sure you're getting some follow through. And then if it's a meaningful trend, then that follow through should continue and you should see the institutions we all know are the ones driving the market. So we want to see where they're seeing that they want to keep applying capital into an idea that's working while minimizing trends that aren't working. Now, we get that confirmation that trend's in force. Here's one on the downside. This was RIMM, and its old stock symbol, RIMM. Of course, now it's changed to BBRY as they focus on the BlackBerry brand. But, RIMM, for example, when it was breaking down, when they were losing market share to the likes of Apple and then the other new entrants in the market like Samsung, you can see we got a couple different shorts here. And the big short that confirmed across all these time frames and the acceleration band breakdown happened. That first gap down, but then that's the gap down on a bad news item there, and then the next bar, it closes under that low. So that's actually the confirmation, that second bar after the first one down. So we won't chase that. We'll say, look, that's a first point of interest. You can see then RIMM continues to just steadily decline. We even got some nice intraday opportunities to hop back on the wagon during that bigger downtrend. And it finally gave a retest. It was violated back up when this 25 last resistance was violated here at about $27. Then that downtrend was over in that part of the move. So from this perspective, you can build your exposure up. We tend to look for retest points to then add to a position, and that's how we'll manage the trade. Now, our big trends indicators are actually varied. Some of the ones you've heard of, like moving averages or Bollinger Bands, I'm sure you've heard of those. And the bottom line is that those are good tools. In fact, they're so good that we, in our more advanced technical trend trader series, spend a whole disc on each of these concepts. But tonight I'm just going to share with you the overview and how you can get started at a very low risk, entry point with my compliments to the Candlestick Trading Forum group. But acceleration bands is one I want to talk about tonight because this is the one that frankly launched my business here at Big Trends because I did so well finding accelerations in the late 90s that I managed to take a bonus at a prior job and basically go up several fold on it in a matter of a few months and said, thanks very much. That's all I need to go ahead and do this for myself and for other traders the Big Trends way. Now, so you learn and you grow. That's the nature of the beast. Now, we were also talking about percent R and some of the basic elements of percent R. We back that up with filters like the Commodity Channel Index. Also, the efficiency ratio looks for very steady trends. You probably heard of the DMI lines, the directional movement lines. We have a very unique way to look at the gap between those with some more advanced percent R lessons and then, of course, having an overall market timing point of view. So all these things go in the picture, and there's MACD too, with looking at divergences too for MACD to tell you when the trend is losing steam. Now, another example here, we're going to talk about Netflix on the way back up. It recently had too, but let's first talk about this breakdown in Netflix going back into late 2011. You can see Netflix was starting to go on the downside, and so you would have thought that this breakdown that it had here, looking at this chart here, you can see how it was just starting to break the acceleration bands, and then it got confirmed. That trade we would have thought should have worked, and it started to work the next day, gap down. But hey, sometimes they come back and they give you even the slightest little whipsaw out of a trade. So here's a trade that did not work. I like to talk not just about trades that work, but trades that don't. It should have held that resistance right there. You see how ever so slightly, it wasn't by much, literally by just a fraction, it stopped us out of that particular trade. Okay? Next trade starts to work the same way, then it too comes back and its retest slightly takes you out of the trade here as well. That's why I'm very picky. That resistance should have held. It doesn't, bye-bye. You know, slight loss on that trade too. But guess what? The next trade, as %R kicks in, you can see we might take part of a position, but it's not below the acceleration bands for two closes until down here at about 150 or 145. But look, then it continues to get pummeled down into the 100 area here, and then eventually you see that this finally retests back in here at about 90 bucks. That actually holds, and it turns on down again. If we were looking at Netflix since that point, it's done a round trip the other direction. Okay, so it took a while to kind of base out. You saw a couple of noisy signals on %R that were trying to break out, but guess what? CCI was not breaking out on my rules, so I would have backed off of that trade. We look like we were breaking out again here too, but CCI was not breaking out and confirming until in this area where it finally got through that $85 resistance. So it's finally moving on through $85 about in here, about 86.65, and that's where this thing really starts to trend last December and this January. Got to buy in front of the earnings. Now, this is a key. If you can buy something well enough in front of the earnings, you can trade it, but then the day before the earnings, if you're up, let's say if you're flat or down, you should be out before the earnings. If you're up, sell enough of your position to get back to what I call a free trade. Here's an example. You know, obviously if you were up a double, you would sell half of your position and get all your risk capital back. If you're only up 50% in your option, you would sell 2/3 of your position and keep a third on. That would be what we call the free trade. Obviously, this one gapped up, and it finally gave a violation of that last retest you can see here off of this next little retest down here back in mid-March. That was a low of 187, and it broke it at 184.85's close. And it was telling us to hop out on the next bar's open there. So what's happened in Netflix since? Chop City, right? You want to avoid the chop back and forth, the sideways action, or else you're going to get yourself in trouble if you're trying to scalp a market with options. Scalpers don't usually do well with options because you have too high of a bid-ask spread, you're not getting enough directional movement, and so therefore, even if you're selling premium, that can be a very difficult and noisy game to trade. The CCI has been headed down on it ever since. We really broke down on CCI back here once it broke that 176 level back in this area, right there about 170, and chopping ever since. And you see how even the directional movement's been very choppy sideways. The ADX in green's been headed down too. All these things you learn about through my educational DVD pack that I've set up for you here tonight. But that just shows you why, hey, before it was headed in a monster downtrend. That was the best down signal from 210 all the way down to $75, right? Huge downside profit. This next one was next big one here outside the bands. 88 went down, finally exited there at about 66.9. So that's basically a 25% drop in the stock over 2 months. You know, that's going to give you a substantial opportunity in options to leverage that with options. Now, by the way, Netflix is one of those that has weekly options, and I do use Netflix not just on the longer term chart, but you can see it also has signals on the shorter term charts. So if you go back, that's into last year, but if we look at the current action, you see we had a little buy in here on the hourly chart from about 170, got up to about 182, stopped out here back at 175, and now Netflix is on a short-term bear signal in the %R, although the CCI is not really confirming it very convincingly. So we'd be a little bit more cautious on that signal, even though it broke one set of bands, it didn't break our other set of bands. So these are things that you learn about across these lessons. Now, bottom line here is, you know, that's what you're looking for is the best of the best type of opportunities. Now, these 4 trading DVDs are the best DVDs to start as a package that I could come up with. We do have other sets that go into more advanced knowledge, but if you're just starting to learn these techniques, these trading DVDs I've set up for you here today are going to really open your eyes. And what I've done is I've put them up. Now, I'm not done here yet by any means. We've got a lot more to share with you, but I know some of you get kind of busy and have to jump, so I just want to make sure that you see this link before we're done. Okay, if you go to bigtrends.com/Bigelow, you're going to see this page pop up with my best systems and best lessons across the last 20-plus years of my trading. And this is 4 different DVD courses that I've done into 10 hours of content for a record low price. It's usually about several $100s, but basically for $97 tonight, you can lock it down and take advantage of that if you go to that bigtrends.com/Bigelow link. Now, what is entailed? What's included here, and this entails really like a 5.5 hour, like almost a practically all-day workshop I did a while back, teaching people from scratch how to assess the markets, how to assess which stocks are going to move, which rules you should use for entry and exit on your options, and a whole lot more. So that's kind of the core of this one. That's usually about $150 value alone by itself. So you think of it as you're getting these other 3 DVDs for almost essentially for nothing when you buy that first one for $97. Well, you get all 4 for $97. You can't break them out and buy just one. It's all 4 for $97 or none. But the bottom line, as part of this package, you pay more buying them individually in a lot of places. Automating your option trading. So many of you need to get your ego, your psychology out of the way. Good trading is about managing your psychological capital. So here I talk about 7 simple rules to really focus on how to develop the system and how to measure that system to know that it's going to produce results for you over time. Like I said, there are no guarantees in trading, but you put the odds, shift the probabilities dramatically in your favor when you come up with a clear trading system giving you buy and sell signals, and you don't have to guess anymore. Then you go into high-impact options trading. This is a 90-minute workshop I did where I go through each step you need to trade options and trade them sensibly. So we teach you very sensible strategies to leverage those fast-moving stocks with the right option strategy, not the wrong one. We see so many people using the wrong options when they buy an option. Acceleration bands are at the heart of this course, so you'll learn how I pick up these acceleration buys and also where you get out of those trades. And then the last of the 4 DVDs is part of this $97. That's all 4 for just $97 total. They're not $97 a piece. It's just one low price, $97. And I don't even think we put it on here, but that's free shipping anywhere in the U.S. There's like a nominal charge if we ship it overseas. But $97, free shipping in the U.S. Now, 7 golden rules for trading success. Here I talk about the 10 problems that all option traders face. Most of them are psychological. There's a couple that are tied to systems, but the bottom line is that we'll teach you about how you can address those psychological challenges you face and get over those hurdles to basically really trade and execute your trades a lot more freely with a lot more confidence. So you'll see how all of those, all you do, by the way, if you want to read up about more of them at the bottom of the page, each of these tabs shows you what's entailed in the course outline, and you can look them up and see what you're missing here, including the top problems that traders face, how to fix that, 6 new charting tools you can use to improve your options trading profitability, how to use a tool I use called option charts. Let's talk about option charts for a second. Okay, so go to bigtrends.com/Bigelow. I'll come back to that at the end. But option charts. Okay, good example. Biogen IDEC. This has been a very big moving stock here this year. We've happened to be on it and catch a pretty nice run in Biogen IDEC. Well, guess what? You see the last big %R breakout happened back here in late January. It was starting to clear all that old resistance, but more importantly, %R shows you as it's starting to make new highs, how's it doing relative to, the past action it had. You want to see a stock making higher highs, and when it pulls back, making higher lows, not basically in a trading range like it was in October, November, December, and January, but really moving into this strong trending phase. In addition to %R breaking out, you also get the CCI confirming, as well as the ADX trending up, getting one little violation there as it rolls over and then breaks out low, but the CCI never violated. The CCI stayed very strongly overbought. We like that. In fact, Biogen just had another retest here, 198.51 back a few days ago, and look what happened today. It's right back into another retest, and it's crunch time here. We'd still use that based on my rules, not today's low, which is lower, but the low on the 15th, which is 198.51. It is absolutely crunch time for Biogen IDEC. So if you're looking at an option chart, The April options expiration is actually officially this Saturday, but actually tomorrow will be the last day that the April options can trade. So I would not be looking at those. I'd probably go out and look at something like out in the May options and say, let's just say for the sake of, I wouldn't usually recommend this one, but if we were looking at the at-the-money call. The at-the-money call, we don't have a whole lot of data on it, unfortunately. Let's go back and look at the Aprils for a second, just to at least get some perspective. I'm not making this as a recommendation. I'm just saying just to get a little perspective about something that's been trading out there for a while. Okay, and you can see even this one hasn't been trading out there that long. But that's a big breakdown that it had here. Compare that even on the hourly chart. Where's the sweet spot on the hourly chart? It's where %R goes overbought, and then we follow through, and then it explodes up soon after that. Same thing happened back here in late March, and we managed to get a piece of this one also for a move that Biogen had back in late February and early March even. So we use these option charts to tell us when the option is starting to move, not just the stock. So this is very valuable information because most people are just sitting here looking at the stock going, well, should I buy the stock or should I sell the stock? Should I buy an option on that stock? Why guess anymore? Why not look at the various strike prices, and I'll teach you how to actually read an options chart. There's some important differences because options have time decay and they have volatility priced into them. So we managed to pop Biogen even back here on this first retest, actually the second retest on that move in late February. We caught it at the beginning of March and then caught it as it popped up here over the next several days. Now, you know, in addition, let me share some more key elements of systems trading with you. You want to have something that's very clear in telling you when to buy and when to sell. Okay, you're not having to guess anymore. It's the guessing that gets you in trouble. I need something that's very clear cut. It's saying, okay, we got a buy signal here, we got a sell signal there. You know, when to get in, when to get out. Because if you don't, you're setting yourself up for trouble here. Now, we tend to focus first and foremost on very simple option strategies for newer traders. So we'll usually recommend a fairly conservative, simple option buying strategy. And then as you get more advanced, we'll teach you some of the other spread trading strategies you can do. And then ultimately can add a whole lot more combination strategies like condors and the like as you get more advanced. But the reason that I focus on this is I've got this in TradeStation, I've got it in Metastock, I now have it in Thinkorswim, and we're looking to add it in some other platforms where you can get these buy and sell signals coming right into you. So another name that to me maybe is not a household name, but certainly one that should be on your watch list would be LinkedIn. Now LinkedIn is actually no longer on a buy signal. But LinkedIn, even when Facebook wasn't performing, LNKD, was performing beautifully right before it blasted off with the earnings. Even if you miss that gap up on the earnings, this is where you can go into the hourly chart and pick it up after the earnings on the follow-through after the first gap up. The follow-through happened just under 150 and traded it over the next week in early to mid-February up to 158 with a high at 163. We got a piece of that LinkedIn gain for about a 40% profit in our weekly options service. Now, you know, from that perspective, you don't have to catch the entire move. We only caught the move from here to there. We literally caught just about a week of that move, and in retrospect, you could say, well, gee, we left some money on the table. Well, guess what? It got going again here back in late February, early March. So the hourly chart shows you the smaller waves within the tide, and then the 15-minute chart will show you even each successive tiny wave, each little ripple, so you can pick up even a day or 2-day type of a move with this indicator for those of you that talked about being quick traders. Today, LinkedIn went negative on the 15-minute chart, and you can see it was just going negative at the end of the day on the hourly chart. So 2 out of the 3 time frames are now more negative than positive on LinkedIn. The problem is the daily chart is still in kind of a crunch time zone here, so we're not actively negative on it, although it could be a quick trade if you find the right low-risk entry point off of a retest. Okay, we're sharing a whole lot. I know it's probably going fast for those of you who are new to this, but you know, what we want to remind you is that all of this is data tested. We run it through all the data. See, this is Apple going back into the middle of last year before the bear market hit in Apple, and, of course, all the money was on the long side. The short side looked like it wasn't worth trading, right, back in June of last year, but the reality is once this thing started to perform, as I showed you before with Apple on the daily chart, you know, it's done a good job of catching that downtrend in Apple about 5 or 6 times here since the stock broke down. So you cannot get complacent and just assume. Remember we talked about the Apple strategy report and how, okay, you can see that comparatively it's actually still not done that great on the short trades compared to the long trades from even the middle of last year. So Apple's still probably a better trader on the daily chart on the long side than the short, but you can see it hasn't let us be long in this market. It's only let us be short. And so you've only had these signals where you can catch quick pops on the downside. And one of my rules of thumb is if you get a double on a trade, you should definitely take half of that off no matter what. That's called the free trade rule. Get your risk capital back on the double, and then regardless of what happens with the rest of the position, you can't lose on that trade. But we, of course, want to manage our way out of the rest of the trade, and if it violates, we'll hop out and move back over to another opportunity. Now, in this special DVD package, we talk about a lot of key pieces of the puzzle. I'm more of a top-down guy. I like to look at, you don't have to have, by the way, TradeStation to learn and understand this DVD set. I'm just showing you what I use, but you can use a variety of platforms. But the idea here is that market timing is where it starts. You've got to know the condition of the overall market. In fact, today finally broke the back of the bulls on one key indicator on the charts. If I look at the S&P chart here, the DMI lines have not been broken on this S&P chart since back here in late December, right before the fiscal cliff worries. Since then, we've been on a steady directional movement trend. Every time the DMI lines had what I call a KISS, a key touch point, we were holding all of those key supports. We tested it again here back on Monday. That low was 155.10. We held it yesterday. Looked like we might hold it today, and we failed at the end of the day. So now the bears in the short term are regaining some control here. We're right back to a 50-day moving average. But the bottom line is that it's a little bit more dangerous of a market than it has been in a while because of the loss of that key support for the markets. Now, some of these other tools you can see are not quite into a sell mode yet. %R would be bear confirmed if we close under today's low going forward, which is 153.55. So it's got a little bit of work to do before that happens. So watch it. So we're kind of in that transitional zone here where you don't want to get too hyper bearish, even though we've managed to, catch a couple of nice quick downside trades here, but you want to make sure that you're focusing on, okay, how this trend is transitioning. We'll also talk about favorite stocks to trade. You want to make sure the stocks you trade match up well with your system. That's why I do all that system testing. The way I find those is by looking at these best technical indicators to find the quicker moves. And then from there, looking at the proper option strategies for any given market. Sometimes it's about buying an option. Sometimes it's about selling an option. But, we really focus you first and foremost on the bigger trends. And then we walk you through, of course, how to manage your psychology by not overcommitting your capital. Making sure that you stay focused on building your capital sensibly. Never load up on an idea. I don't care how confident you are that that is going to actually work. So the bottom line is that, as you build your plan here and really map it out, I think you'll find it's much more effective to start slowly and build rather than, to get yourself in a position where you can really get yourself in trouble here. So how do we master the markets here? We focus on all these key pieces of the puzzle. It's not just about knowing how to get in. I think we're even better about showing you how to get out, how to book partial profits at certain targets and then ride the rest of the trade. Our market timing has been widely acclaimed. We've been highly ranked before in Timer Digest and other places. But the bottom line is that, we'll share with you how to assess the market. You want to get more of your trades in the right direction with the market. It doesn't mean that you have to always be bullish when you've got an uptrend in the market, but you certainly should be biased to the call side until we just have this transition today. My favorite systems, I'll show you the acceleration bands and the %R, more details about those as well as these DMI lines. When you go to that page, bigtrends.com/Bigelow. And as I said, we're going to cover all these topics. We already covered all that, the S&P, market timing, and then scanning. I want to talk scanning here for a minute. And what are we scanning for? We're scanning across all these indicators, the acceleration bands. We're scanning across how do they differ from Bollinger Bands? You'll learn that too because there is a significant difference between acceleration and Bollinger Bands. Bollingers look at standard deviations. Acceleration bands add another key component that's missing into the picture, okay? So we'll talk about the DMI line. So look at the gap between those, we call DMI difference. Larry Williams developed a percent range or percent R indicator. At Big Trends, I basically tweaked it to be more of a trend following indicator. Looking for very efficient trends as well as the commodity channel index CCI readings. So there's all kinds of strategies you learn, everything from the momentum breakouts to the retest, lower risk entry points. Everything in here for day and swing traders out to position traders, and all these key pieces of the puzzle, including setting targets, managing your exits, and going from there. I want to talk scans for a minute before we're done tonight, because the scans is really where the rubber meets the road. Once you learn these things, you can actually go apply it and go run them through the scanning process. So, what I'll do here is I'll show you how I scan systems and looking at the charts and looking at those key levels for support and resistance and where we should place our targets. I'll show you the indicators that I scan on here and how I would place a trade with the proper option strategy. So let's just do that right now as an example. So what I've got here in TradeStation, and you can get this in any software you have that'll do scans. Radar screen is what TradeStation calls it. If I was looking across a little bit of a longer term perspective first, what I could do here is say, okay, show me, we just had a little bit of a bearish switch in the market, so I'm really more interested in the bear side trades right now. So show me the weakest stocks as of today's close across my watch list. And you can see a couple of them that pop up include CMI, it's Cummins Engine. You've got a confirmation coming in here on Sears Holdings. These green mean we're getting bear confirmations. Apple, of course, went bear confirmed just the other day. It dropped again today. We've also got CME Group. Even though it was up today, it actually still shows a bearish follow-through. And then Caterpillar. Cat's been a real dog on the downside, and so definitely one that we want to pay attention to. And we've got a whole host of other candidates on here as well. So what I do is literally I've got it to where I can go in here, click on Cat, and it'll change all of my windows automatically. Now, you can see Cat's already been on an established sell signal, even on the daily chart. Even before it broke the 200-day, it said sell it on the percent R at $89.47 on that last signal. Now we're at about 80.5. So, we're not early on this particular signal. So what this means is you do not buy puts on Cat right here. You must wait for a retest. Well, if you were stalking this trade from the last time you had a sell signal, where would you put on this bearish trade? When percent R snaps back up here to give you what we call a retest, back over, in this case, this 20 percentile line. This high became a very big high to watch, and you see that high was $86.65. The next day, it actually goes above there during the day. You say, oh, that high's not holding as a resistance that Headley expects. But look, I don't overreact to the intra-bar action. I wait for the close. 86.65 at the close, it was 86.57. It held that resistance. So you could literally draw a resistance line right off of that short-term high there, and you can see how for a couple days we have what I call the bend but don't break pattern. The downtrend looked like it was going to break. Intraday it bent, but then by the close it was back underneath that resistance at 86.65. So right now, of course, the stock's down at 80. You would wait until you get percent R snapping back up above that 20 percentile to find your next low-risk re-entry point. It doesn't mean that's going to be right, but it means that you can keep your risk down, because if you're wrong on that last one, you would have stopped it out if it closed over 86.65. So you're putting that trade on within a very tight area within that resistance and basically keeping your risk very managed. So from this perspective, this is how I go find opportunities, okay? We mentioned Cummins Engine, CMI, came right up to the top of the list as one of the weaker names on the list. That was actually just now giving a short signal here. So you've got to check earnings. Make sure that you don't get stuck on one that's just about to report earnings. But if they already have the earnings out, this one's starting to break down very hard here across all these things. The only thing you can make a case on is at the 200-day, so about 103.65. That's probably the first support. But it's losing the band support. It's broken on CCI as well as percent R, and the ADX is now trending up. This says that this is a likely downtrend scenario. You could put part of your capital on here, but then you'd wait for a retest on the rest. So the retest is going to be your lowest risk entry point. So these type of things, and again, we want to look at, okay, that's fine, but does it actually perform? And unfortunately, on this one, you can see that it's been a little bit more volatile. And so from that perspective, you might say thus, if you're going to trade it, you would trade it smaller because it's been a little bit more volatile. You'd really prefer to see ones that show you a more positive, consistent equity curve like that Apple example I showed you. But it's worth pointing out and saying, okay, it's one you can watch. Now, let me make sure. I haven't really had a chance to answer questions here, so I'm going to kind of go back and scroll through a few of the questions here. And you also want to be aware, for example, of things like volatility. The VXX, the volatility index, is finally starting to rally. The VXX is the tradable volatility, and it is absolutely crunch time here. Historically, when VXX gets overbought, usually the market is at a short-term inflection point. If volatility goes in and percent R breaks out, essentially VXX closes over today's highs going forward, that would actually be bearish for stocks in the short term. So 2254, a very important level for VXX. The last time we really got going, we had a brief little area that was troublesome for the market from middle of May to early June this last year. But you could go back and look at the worst period was the summer of 2011. August of 11, VXX went from equivalent of about 115 up to about 236. Volatility doubled. If volatility doubles in this case from the mid-20s, you're going to be looking at volatility into the 40s, and that would be very troubling for the market if that were to happen. The 200-day is up in the mid-30s. So this is a time to be watching this very closely, because if this market breaks a little bit further and volatility surges a little bit more tomorrow, that would be bearish for stocks in the near term. Pay attention to this, because now you can make money on puts in that kind of a scenario. You don't have to be worried anymore about down markets. You learn how to start profiting from down markets. So from this perspective, let me just remind you, since we're at our hour point here, and then I'm going to come in and answer some questions. If you go to the special page I set up for Steve, easy to remember, bigtrends.com/Bigelow, I'll post it in there one more time, that what we're looking at here is, a situation in which, clearly, you can get some of the settings, but you need to know how to use them, how to respond, how to not to overreact during the heat of battle. So definitely, some settings were shown there, but bottom line is make sure you can go plug them in, but make sure you know what you're doing, because you might know just enough to be dangerous. So I want to take you past that and really get you to where you really understand what you're doing here. So what I've done is I've combined 4 popular trading courses, because I know you're geared on the trading side. These are definitely for traders more than investors. So automating your option trading, profiting from the big trends in any market, whether you do stocks, forex, indexes, ETFs, and of course options, and then getting into a little bit more specifics on the options bonus DVDs here, high impact option trading, and the 7 golden rules for option trading success. I've combined them all into a package that would literally cost hundreds of dollars usually, but we call it our Trade Secrets Library here for our friends of Steve Bigelow, as I know you are, as I am. And bottom line is we set it up for Candlestick Forum, Trading Forum members here tonight to go ahead and you can add that to your cart. You hit that Add to Cart button. You'll see that it'll pop up our shopping cart, secure page, of course. And it gives you little descriptions of each one here that you're getting. So you're getting all 4 of those for $97, and like I said, free shipping here in the U.S. So just put in your information there. Of course, we take all the major credit cards, Visa, MasterCard, Amex, Discover, and you can also do PayPal there. But bottom line is then, you can check that box, agree to the terms and conditions, and if you've worked with the trading consultant here at Big Trends, give them credit on the drop-down box. But bottom line is that, submit your order for 97 measly bucks. You're going to get literally years and years of lessons that I've learned, sometimes the hard way, but a lot of times the good way, to basically put 10 hours more of this content at your fingertips. Here I'm not going to be blazing through it across these courses so much as I have tonight. I know I've gone a little fast probably for a few of you, but the bottom line is that, if you don't trade options, Joel says, is this for me? There's so many lessons in here, Joel, that it's beyond just things for option traders. It's really for any type of trader. If you were a trader, I think you're going to see great value here. Here's a promise I'll make. If you don't feel that it was totally worth it for the $97, tell us and we'll apply it to something else. I can't do a money back guarantee on this because basically I basically just for fair sharing, I throw Steve some for basically allowing me to get in front of you and basically I can't lose on the deal. But bottom line is that if you don't absolutely see that it was worth every bit of your $97, I'll let you go apply it to something else in our big trends world, whether in our recommendation programs or other education, what have you. You're gonna definitely learn a lot of lessons from it. So we're talking about just one DVD has 5.5 hours. The others add up to about another 5 hours. So you're basically at 10 plus hours of content here across 4 of these particular DVDs. They're recorded at different times, but I think that's what makes them even more valuable. As you see different examples across different types of markets, bull and bear. This stuff has worked for me in all kinds of different market environments. So from this perspective, I think you'll find that it really will open your eyes to a new way to trade. If you've been frustrated at all that you're missing opportunities in this market, then you need to look into this. And for $97, for me, I would think that, hey, how much can you make on a good trade? Probably a lot more than $97, right? Let me flip it around. How much could you lose if you made a trade you shouldn't have made? You ever lose more than $97 on a trade you probably shouldn't have made? Yeah, you probably have, right? Probably maybe even recently. Well, the bottom line is, look, someone once told me, if you think education is expensive, try ignorance. Obviously, at $97, it's not expensive. It's my way of giving you a very low-risk entry point into my view of the world, the big trends view, where you can literally learn from years and years of my experience in the comfort of your own home or office. You can watch this as many times as you want and basically keep reinforcing these lessons again and again and again. Now, we don't have anybody here to ship them out tonight, but we will ship these out first thing tomorrow morning. So basically, we're going to expedite them to you right away. And so the reality is you'll see that it's well worth it, and we're just very committed to making sure you see huge value. I see all these other competitors out there. I know Steve gives great value, too, because I've seen him really give you some great ways to get in his membership site, get started, and build you up over time. We're the same way at Big Trends. That's why Steve and I both do so much together over time, because we really both have at our core education as the first value, that if we educate people properly, they're going to keep coming back and they're going to be able to build on that solid foundation. And let's face it, if you didn't get a solid education when you first got started trading, you probably got your house blown over. You probably took some knocks that you shouldn't have had to take. So the reality is that this will help you a whole lot. And I do want to send thanks out to the orders that are starting to pile in here, and say thank you to Gene out of Minnesota. We've also got Michael. Thank you as well. Utah, we've got Richard coming, G coming in from Seattle, and more that are starting to flood my inbox, and I can't keep up. But basically, I want to say thank you to all of you for going ahead and locking it down, mainly because it's not just for me that you're doing this for you. You're making an investment in yourself. Now, if you weren't going to get a payoff on the investment in your education, I would have issues with it. That's why I said if you don't see that it's worth every penny of that and many-fold more, then basically tell me, and we'll put you into something else, and you can try one of my other programs or something else until you're more than satisfied. But the reality is I never have anybody take me up on that, because they're like, I can't believe he gave me all that content for $97. That's a lot of lessons to share when all these other educators and options especially. I saw one that's charging $4,500 for their program or whatever, and I thought, man, we give more in that $97 course than what I see in their entire program. So the bottom line is, look, this is the type of opportunity that you're not going to get very often. And once this is gone, at the end of the day tomorrow, I'm gonna keep it out there. So at the end of the day tomorrow, and once these are gone, they're gone. Or once that midnight ball drops, then basically this offer turns into a pumpkin and it goes back up to the $350 or whatever it is on the list price for the whole thing. So lock it in at the $97 right now, and you can take advantage of this. Now, quick question from Joe. Is the acceleration band or any other indicator downloadable in these DVDs? we will give you some more information about acceleration bands when you buy this. Just drop us a note after you sign up. You'll get an email to contact us and say, okay, yeah, I mentioned that you could get more information on the code for acceleration bands. Just a last-minute bonus we'll throw in for you just to go ahead and make it an absolute slam dunk that you can go and apply what you're learning here across a variety of platforms. So, the acceleration bands, very eye-opening for a lot of people because I don't know about you, but one of the biggest challenges I think that we all face in the markets today is too much noise. There's too many things to look at. There's too much information coming at you. I really boil it down to the best of the best opportunities. So, again, I want to say thanks to all the other buyers that are pouring in, like Peter in California, thank you, as well as Michael L. out in Minnesota, and others that are coming as we speak. Let's see, there's more like Kathy coming in from Iowa. Thank you very much. Also Jim O. out of Wisconsin, and more like Andrew out of Maryland. Thank you all, and more to come. Those that are about to buy, I want to say thank you in advance. And if you ever have any questions off of anything off of the DVDs, then let us know. You'll also get an email address when you sign up that'll be a contact point for you to ask questions. We never leave you hanging. You always know where you stand. And so the bottom line is that you can really take maximum advantage here, and you'll really see basically a huge edge. Like Don M. mentions, he learned the %R from me, and he says he can really get ahead of the stochastic. So people that are using stochastics or RSI, in my view, are behind what we're doing in the %R. You're going to see just how to take advantage of this and really leverage it the big trends way. So more orders pouring in. Thank you, Stephen, out of Florida, as well as Mary coming in from South Carolina, and Diane as well coming in from British Columbia. Beautiful area up there, and so many beautiful areas. Hope your area is just as beautiful and you're enjoying it along the way. Ray as well, thank you very much, out of Virginia, and more. Any questions you have, let us know. We're standing by to help. You can also contact us at 800-BIG-TRENDS. You can also get on our free list if you go to bigtrends.com/free. That gives you, if you like this webinar, you'll get additional webinars through the bigtrends.com/free. Sign up if you're not already getting our webinar invites, and I'll be having Steve soon as well as a thank you back, because I love what Steve has to share too. But they are coming in. We appreciate each and every one of you, and if you have any questions, let us know. You can get us at 800-BIG-TRENDS, or you can drop us an email at clientcare@bigtrends.com. I got to jump because I'm way past my time. I want to let the rest of the good folks from the Candlestick Trading Forum go home too. Thank you to Becky. Thank you to Jim and others who've made this such a smooth process. And, of course, thanks to Steve. He's built a great group of fans here as well. So it's a pleasure being with you at a huge crowd, and wish you a great night. Even better trading tomorrow and in days to come with the Trade Secrets Library. Go to that page. I'll post it one last time here, bigtrends.com/Bigelow. Give appropriate call out to my man Steve there. But bottom line is, any questions you have, let us know. But check that out and don't miss it, because it'll go away by the end of the day tomorrow. So lock it down and we'll ship them right out to you, so you can start learning how to not only earn, but keep learning new and fresh ways to stay one step ahead of the markets. Thanks again. Have a great night, and see you soon.